Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein with your weekly metals update, and this is for Friday, and we are now on the 1st of December, 2017 at 3:40 p.m. Central Daylight Time. Okay, my friends, I know you all want to trade Bitcoins because the whole world seems to. I don't know why, but they do. December 18th, the Chicago Mercantile Exchange is going to launch its Bitcoin futures contract. Behind it will be 5 Bitcoins. The value of them at least. The margin level they're determining to be 35% of the value. That's how it'll start. The maximum it can move in any one day, from what I understand, is about 20%. The contract minimum tick will be $25, $5 a tick for each of the coins. So away you go, and you'll get more information from this from me. Now today was an interesting day because what we had was Mike Flynn went to court, admitted to a judge he had lied to the FBI, and now he's going to testify against President Trump. I don't know what that means. The president, it depends at what point. First of all, I don't even know that he can do anything against a sitting president, but let's go before the president became the president, the campaigner of Trump. Well, at that point, what did he say? Did he say meet with Russians over Syria and other things? What were they talking about? Second, you got a problem now because Mr. Flynn's an admitted liar. That becomes another issue. Third, the marketplace, not Ira Epstein, looked at this, dropped dramatically. You took the Dow down to 23,924. It's come back up rather dramatically from that, 24,241. We're talking 300-point moves, just like nothing intraday, 100-point swings in the NASDAQ. Because what I think happened is the market realized what I just said. It's one thing to accuse, another thing to be able to prove. But I think traders went further. And they said, gosh, we don't want to be involved in an impeachment, but if we were, who takes over? Mike Pence. Not a bad choice. That's what I think happened. Then you've got the vote in the Senate taking place. And it looks as though they have the necessary votes that by Sunday, I expect to say to you, it is past the Senate and it's going to the joint conference. So all that weighed on the markets today. Metals, I wasn't that impressed. You're still down in the silver market. Copper I get coming up a little bit. But remember, the copper market had gotten down to some big bad areas. These are still December quotes that I'm showing you on this part of the chart, by the way. So let's go over here to the, because I'm dealing with the monthlies and the weeklies, let's take a look at the monthly chart of gold. It is still sitting at this key area of the 18-month moving average in red. And when I wrote a report 6 months ago, I had made mention of this. It's got to get away from that. It had one run, as I expected it could, to the 100-day average in the upper Bollinger Band. Go read my June report and you'll see what I'm saying. But it couldn't go anywhere. So it's pulled back right here. Get under 1260.50 on a close, you could have some problems in this chart. When you go to a weekly area chart of closes, the market did close underneath the 18-week moving average. That keeps the bias, the thrust of this market down. You can almost see that you've got lower highs and you certainly got the lower close until you get back over right here. The number that could turn this on the weekly chart is closing over 1296.50. Why? Because that was the last peak high, and because you're going to finish this week here, it could set up a peak at 1268.50, another about where you're at this 1280 level, and then getting over that could be a shift in the momentum of the market. When we look at a weekly bar chart, you can see how the market's got a big outside week down. It's pretty important. If it's not going to be a trap for the bears, then it shouldn't be taken out. And I'm talking the high of this week, which is 1299. Now remember, that's tying in with that 1296.70 that I'm talking about. When you put the swing line on the charts, well, what do we have here? This high did not get over that high. I believe I'm right on this. This high, 1297.50, yeah, you made the higher high, but then you make a lower low. Got it? I probably said that backwards. You had the higher high, but because you had the reversal and came back through the low of last week, it ends up with a pattern of a higher low first and then the higher high that collapsed on it. In other words, no trend. You don't have a sequence of higher lows, higher highs, lower lows. You're out of that sequence. The market's got a battleground, and it's had it for quite a while here. How many weeks almost in a row? 2, 3, 4, 5, about 6, 7 weeks in a row. Keeps hitting the 18-week moving average, not able to move away from it. If it moves away from it to the downside, well, the first stopping spot could be the 100-day average in green at 1254, then 1246.20 on the lower Bollinger Band. If it creates what we call that bear trap, taking out this week's high, then the next number is 1333.80. I have nothing over the chart but that and resistance. Momentum continues to point down. It's just coming down, and I don't look at momentum on a weekly chart as overbought or oversold. Momentum is pointing down. On the weekly silver chart, bearish. One word. Lower highs, lower lows. Admittedly, you've hit a major target, and in the past, these Bollinger Bands have done an excellent job of giving a value area. So if it's a value area, the 1616 level at the lower Bollinger Band, and you got down to 1620, very, very important. Okay, it didn't quite hit it today, this week. It missed it by about 3 cents, but that's the value area. Where's the resistance? Well, if you believe, as I do, that moving averages could be that, back at 1704. In order to negate the downtrend on this pattern, not create an uptrend, you have to get back over 1738.5. That's $1 an ounce higher. It's going to take an awful lot of something to do that. Remember, we did have missile attacks this week. We're yet going to hear on the new sanctions that the president's releasing on North Korea. We're yet going to hear more pressure probably put on China. Market's not responding to it. In the copper market, you've got the lower highs, lower lows, battleground, 18-week moving average of closes, pretty clear. Momentum pointing down, but the bias is staying up because you closed over the 18-week average. The battle in the platinum market, where would you think it is if you were to just join in a chat room with me? I'd be teaching you, if you take my charting course, battleground's the 18-day average, that line in the sand. That red line, and that's where you're at. So while the market has a pattern of higher lows and higher highs, it's unable to close over that number. That's problematic. Momentum, flat. It tried to turn up, and it just sort of went flat on you. The strongest of the metals, and you know I was saying this on the daily charts, and the weekly has proven that out, is the palladium with higher lows, higher highs. It hits that upper Bollinger Band, backs away, hits it, backs away, and it's keeping that momentum built in. It just stays forward, and this market, until I guess you get under 986.25, still looking quite solid. Now in the dollar index, you've got the higher high, lower low, no trend. Battleground, 18-week moving average of closes. Momentum is certainly pointing down, and the bias is down because you're under the 18-week moving average of closes. So you put it all together, and I've got a gift for you. My charting course. My charting course is $109.95, and yes, it teaches the swing lines. Everything you see me talking about here, I add to that with more moving averages than you see. I add to that with window envelopes, more talk about slow stochastics, and I teach you. Now, the course itself goes through all this. It's $109.95. Now, I'm going to lower it for the Christmas season. You need the code XMAS when you go into the website, $79.95. And this is an online course. There's no shipping. There's no handling. You want to give it as a gift? You can. Just when you buy the course, let us know. We'll be sending you emails. Say, hey, this isn't for me. It's for somebody else. Don't start the free charting software and all the other goodies until that person tells you to go ahead. Done deal. Then come the first of the year, I'm raising the price from the 109 again. Higher. How do you get it? Call us. Go to our website. Take a look. You've got a whole course there, area that teaches you under the word education about this. Click on, if you're watching me on YouTube, right up here, or underneath us. Click here for Ira's free information, and away you go. I'm Ira Epstein. Y'all have a great weekend, and I will see you come Monday.